Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Shark Tank celebrity and chairman of O'Shares Investments, Kevin O'Leary, has repeated his earlier sentiments that cryptocurrency exchange Binance and its founder were largely responsible for the collapse of the now bankrupt cryptocurrency exchange FTX. The Canadian venture capitalist offered this skewed hypothesis on Tuesday while testifying in a congressional hearing on the FTX collapse. When asked what he thinks led to the exchange's tumultuous collapse, O'Leary mentions that Sam Bankman-Fried, the disgraced founder and former chief executive officer of FTX, spent billions of dollars trying to buy out Changpeng Zhao's shares in FTX. SBF and FTX reportedly had problems getting operating licenses because they were linked to Binance. But this sympathetic theory has too many holes in it. For instance, it fails to consider the appalling fact that SBF and Alameda Research, his now bankrupt crypto trading firm, used clients' funds at will. There have been extremely disturbing reports of palatial mansions in the Bahamas for FTX and Alameda executives and even the executives of connected firms. As CZ stated in a tweet while replying to O'Leary and SBF's allegations, the former crypto billionaire is solely responsible for the toppling of his multi-billion-dollar crypto empire. He ran the exchange like his personal coffers and watched as the executives at Alameda, including his ex-girlfriend Carolyn Ellison, reportedly gambled away billions of dollars of clients' funds. In addition, Binance is licensed to operate in several regions of the world, which defeats O'Leary's description of it being a completely unregulated exchange looking to take out a rival by hook or crook. It is also important to mention that O'Leary received around $15 million to become FTX's spokesperson last year. He lost most of that money in the collapse, but surprisingly remains convinced that SBF had almost no blame. His comments are also eerily close to what the disgraced former billionaire would have told Congress had he not been arrested in the Bahamas just a day before the congressional hearing. According to an exclusive transcript obtained by Forbes, SBF planned to blame CZ and every other person but himself for the collapse of FTX. We will now take you to the congressional hearing. But before we do, please hit the like button and subscribe to the channel for more videos like this. Thanks and enjoy the video.
Let me ask you directly. You are an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, okay, let's step back. This is a simple case in my mind of where did the money go? And I said, Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it? And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulator's request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX, wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure, it's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated, global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Do you agree that FTX customers and perhaps your own investments would have been better off if FTX had complied with the existing regulation we have that bars brokers from trading with customer funds?
Absolutely. But they were not compelled to do that because they were offshore and unregulated. I think the model will not work. There's examples of how regulated exchanges that are attached to broker-dealers have worked. You only have to look up to Canada, the OSC order, where BitBuy wallets are controlled by the regulator. They limit the number of tokens. They limit the margin. They limit the lending. They do an exhaustive test of proof of reserves. And that's just the rules they implemented that they just copied from their own exchanges.
Right.
We need to do the same thing here. It works. It's been proven to work. There's millions of Canadians that have accounts that are working under a very strict regulatory environment. We can implement the same.
O'Leary had much to say about Binance's involvement in the collapse, but little about FTX's fraudulent business practices. Hopefully, the courts will be able to separate these tall tales from the actual events that caused the collapse of the exchange and 130 affiliated firms. While the venture capitalists' role in criminal culpability, if any, is yet to be decided by the courts, he is still a firm believer in the potential of the cryptocurrency industry. During the hearing, he appealed to the House to establish adequate bipartisan regulation for the industry to avoid future multi-billion-dollar collapses.
In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, the developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. In August of 2021, nearly 3 years after I started allocating capital to the crypto sector, I entered into an agreement with FTX to be a paid spokesperson. I was paid approximately $15 million for these services, plus approximately $3 million to cover the portion of the taxes due. Of the remaining amounts, approximately $1 million was invested in FTX equity and approximately $10 million in tokens held in FTX wallets. The equity is now most likely worthless, and the accounts have been stripped of their assets and, interestingly, financial records. I've written all off to zero. Because I was a paid spokesperson, however, I never invested any capital from our partners or LPs in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this situation will be discovered by following the transaction trail after obtaining the records. I've applied for membership on the FTX Creditors Committee in connection with the bankruptcy proceedings because I feel obligated to pursue the facts on behalf of all stakeholders and believe my perspective of this situation will be helpful to the other creditor committee members. The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, in the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise had no impact on the long-term potential of American debt and equity markets. I'm only one of many investors that have experienced this loss. However, this changes nothing in terms of the potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. I understand why many leaders in the banking industry are open skeptics, calling for the banning of these new crypto software technologies. Disruption is always uncomfortable at first, and entrenched businesses abhor new competition. But it has been proven time and time again that disruption is absolutely necessary in advancing the economy. There is the risk of investing in crypto, and then there's also the risk of not investing in it and letting others accrue its benefits first, essentially gifting them a competitive advantage that could be very, very hard to recapture. So where to start? We need to clear policy and regulation for the crypto industry, its entrepreneurs, its developers, and its users. Congress should start by passing bipartisan legislation that creates a sensible regulatory framework for digital stablecoins backed by the U.S. dollar. Why? A well-regulated stablecoin backed by the U.S. dollar and other high-quality liquid assets could become the global default payment system over time. The U.S. dollar already denominates the price of oil and other commodities. Why not everything else? What could be more bipartisan than this? Let me close with this. We need to get to the bottom of what happened with FTX, but we can't let its collapse cause us to abandon the great promise and potential of crypto.
As he stated during the DealBook Summit, SBF maintains that FTX US is solvent and client funds are only locked up at the behest of new Chief Executive Officer John Ray and his team. It's also stated in tweets and interviews that CZ played him and influenced the bank run that caused the collapse. What do you think about these claims? Would FTX have survived without CZ's tweets that Binance was selling off its FTT tokens? Please drop your replies as well as thoughts on O'Leary's testimony in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.